It's Friday, January 19th, 2024, an absolutely beautiful day today. Please make sure to like, share, and subscribe. We have a lot to talk about today. I want to start with this, the markets. Almost laughable, the market manipulation that is taking place right now. Dow Jones was up almost 400 points today. NASDAQ up 255 points. S&P 58, all-time high on the S&P. 10-year bond yield 4.13%, and it was creeping up today. So we began this morning watching bonds sell off yet again while the stock market is going up, while gold prices are going up. Bitcoin up $700, gold up almost $10. So what is all this based on? We're watching markets go up while bonds are selling off and gold is going up. And so what is all this based on? What's all this market euphoria based on? S&P at all-time highs, Dow Jones up 400 points today. I didn't see any great news in regards to what's happened in the economy, but of course the economy and the stock market are completely and utterly detached from reality. None of these two things are not attached at all. They are completely detached. The markets have been completely detached from reality for such a long time. They're so rigged, so manipulated. And you know, people will just say, well, the economy is doing great, that's why the market is up. Please comment down below. Please tell me and all of us why the markets are up. And you know, we have Bostic from the Fed coming out going, well, we probably won't even see a rate cut till July. Not March, July. And who knows, by July, they could be telling us it won't be till November. They keep putting it off. So is it this market euphoria based on rate cuts? Before it was going to be 6, maybe 7 rate cuts. Now it's going to be 2, maybe 3. So I don't get it. If you do, please explain it to all of us down below in the comments. Here's another one. Consumer sentiment surges while inflation outlook dips. The University of Michigan survey shows. This also on CNBC today. Please comment on this one. This is very confusing. The consumer, is this resilient? Take the credit cards away and see what happens. They never tell you how they're paying for all this. But thank God for credit cards, even though nobody can afford rent, nobody can afford a house. And just let's not forget, not too long ago, last summer, 20 million households could not pay their utilities. 20 million households in America last summer could not pay their utilities. I could not find the most recent number, but that is the most recent I could find was last summer. 20 million households in America couldn't pay their utilities, but consumer sentiment surges based on what? Because everybody's working 2, 3, and 4 jobs? I mean, we are just being fed so much BS here, ladies and gentlemen. You know, I talk to people every day. I'm sure you talk to people every day. You talk to your friends, your neighbors, your relatives, your family, people at your church. I don't see a whole lot of people bragging about how good the economy is doing. I don't see a whole lot of people bragging about how well they're doing. Yes, there are people doing very, very well. God bless them. If you're doing well, thank God. Thank God. But the majority of people that I speak with are not doing that great. American Express CEO says spending is strong. Delinquencies are down from 2019. CEO Stephen Squeary said that the credit card company American Express saw good consumer spending during the holidays and signs of strong overall health for U.S. spending. Again, how are people spending? They're spending with the use of credit cards. But the other question, the flip side to this is how much money are people saving? Are they saving money? 66% of this country does not have $400 saved up. Let me repeat that. 66% of this country, Googled it today, 66% of this country does not have $400 for an emergency. Yet the American Express CEO, Stephen Squeary, said that credit card companies like his saw good consumer spending. But they don't have $400. I don't know how much longer this can go on. People aren't saving money. Their savings accounts are wiped out. They're tapping into retirement accounts now. And yet we're supposed to believe because this CEO told us that they saw good consumer spending, so everything's good. comment down below. Here's an interesting article coming from the Daily Mail, and it's quite the opposite of what American Express says. It's titled, America's Debt Time Bomb. Missed credit card payments are up in 49 of 50 states as grim study shows where inflation and high interest rates have wreaked most havoc. Delinquencies are rising the fastest in the state of Oregon, where they're up 50% in a year. 56 million credit card holders have been in debt for over a year. This is not a good sign for the economy. And people who are now falling behind, they're delinquent, they can't make those minimum payments, they've got a couple problems here. They're going to be charged late fees, and their credit's going to be dinged. And you do not want to be damaging your credit right now at all, heading into what we're heading into. Interest rates on these cards now are almost 23%. We have $1.08 trillion in credit card debt, and that number is going to continue to rise. Again, these are not good reflections of the U.S. economy. Mississippi had 39.14% rise in delinquencies. And when we look at the list, just you go to the article, but I didn't put them all down. But Oregon, obviously number 1, Wyoming was number 2, Alaska number 3, Utah number 4, California was number 9, and Florida was 13th in the rise of delinquencies, in credit card delinquencies. Average household debt increased $754 in the year September 2023. So debt is rising. The interest on these cards are rising. The dependency on these cards is rising, and people's bills are continuing to just increase. And people aren't now just buying stuff with these cards. They're paying essentials. They're going to the grocery store. They're paying rent. They're paying utility bills with these cards. They are in now survival mode, desperation. December home sales slumped to close out worst year since 1995. This on CNBC today. December home sales were 6.2% lower than the same month a year ago. Inventory was up compared to a year ago. I looked at bankrate.com for a 30-year fixed rate. You're looking at 7% on the dot. When I look at this article, home sales slump to close out worst year since 1995. This is a housing collapse, ladies and gentlemen. People will go, it's not a housing collapse because prices are up. Well, you can ask $1 million for your house, but if nobody's buying it, who cares? Nobody's buying it. Sales have collapsed. The industry is collapsing. If you're in the real estate business, you're 1 in a million if you're making money right now. Most people are taking brutal haircuts. If you're in the mortgage industry, if you're selling homes, if you're related to the industry, to the real estate industry at all, you are really getting beaten here. And I hope you saved a lot of money because it's only going to get worse. Commercial industry has already collapsed. And it's going to get worse. Now, residential, we're going to see very, very big trouble. And people could say, no, we're not. We can argue all day, but we'll just see. We're going to see how it all plays out. But when you have households with this much debt, it's unsustainable. When you have people now in survival mode with credit cards, it's unsustainable. When you have people that own 5 houses because they're real estate moguls because they got into Airbnb and VRBO, it's not going to be good. It really, really isn't. And then you just have life, right? People get divorces, people pass away, people take jobs, they have to move for whatever reason, and people have to sell. So at some point, people are going to have to get real and prices are going to have to come down. And when they do, remember, that's the new comp. So if your neighbor is selling his house and he has to move next week for whatever reason, or maybe it's a VRBO or an Airbnb and they haven't rented it in 9 months, well, guess what? They're going to sell it and they're going to have to probably lower the price. And that's the new comp on the block. And that's what the bank is going to finance for a comparable house in your neighborhood. And we're going to begin to see more and more people head to the exits and they're going to push prices down. And you may think your house is worth $1 million, but your neighbor just sold the same house for $800, $850, $750. And that's what the bank has now appraised your property for. So that's coming. Apologize if you hear any snoring. Nugget is over here with a power nap and Mimi is over here suntanning. Single family housing starts fall 8.6% monthly in December. This on CNBC. Again, if the housing market is so booming so well and we have such a shortage of inventory, why are we seeing housing starts falling? They should be increasing. If we have so many people that need homes and we don't have enough inventory, why are we not seeing housing starts? If we have all this demand, why are housing starts not increasing, but they're actually plunging? Wayfair shares surge after home goods retailer announces 1,650 job cuts, 13% of workforce. So that's great news for the stock market. They're trimming the fat. They're getting rid of jobs. 1,650 people now. How are they going to make their mortgage payments? How do they make their car payments? Is this really good for the economy? I don't think so. Watches of Switzerland shares plunged 33% yesterday after guidance cut. I thought this was interesting and I want to talk about it today. Watches of Switzerland is the UK's biggest seller of brands such as Rolex, Omega, Cartier, Breitling, TAG, etc., with 211 showrooms across the UK, the US, Europe. They employ 2,800 people. They said we now expect these challenging conditions to remain for the balance of our fiscal year. So 1 minute the stock market is just booming, but then we see more layoffs and we see more of a slowdown in the luxury market, and housing is collapsing, commercial real estate collapsing, but yet the stock market is up, so everything should be okay. We've got to remember that the stock market really has nothing to do with the economy. And we have to remember that the top 10% own 93% of the wealth in the market. So it probably didn't really change your day today that the markets went up. And so we're gonna be told every day how great things are because the market's in the green. MSN, childcare costs make working pointless. Cash-strapped parents rant after spending half their wages on daycares. Weekly nanny prices jump 4% to $766, and millions rate their savings. That's the title of this article. Across the US, parents are complaining that daycare now costs more than their rent, more than their mortgage payment, more than their college tuition fees. 24% of parents spend a quarter of their household income on childcare. 50% spend more than $18,000 per year on childcare. Somebody please explain to me, comment down below, how in the world is the average family in America surviving right now? Just go to the grocery store. I bet you a family of four probably spends $300 a week, easily. You have childcare costs, you have home insurance, you have auto insurance, you have rent, you have a mortgage, you have cell phone bills, you have cable bills, you have utility bills. Don't forget Uncle Sam. Don't ever forget Uncle Sam. I don't know how people are doing it. I really, really don't. Please explain it to me because I have no idea how people are keeping up with this, because personally, I've never seen the economy in such disarray. I've never seen it this bad in my entire life. And I've never seen prices this high. I've never seen so many people struggle. I've never seen so many people in America food insecure. I've never seen the food lines so long. I've never seen so many tents on the streets of America as I do now. Absolutely shocking. I'm going to finish with this last article today coming from The Hedge. It's titled, Central Banks Will Keep Gobbling Gold in 2024. It says here, the first half of 2023 was a record-breaking moment for central banks' gold buying, led by none other than China and Russia. On a year-to-date basis, central banks bought an astonishing 800 tons. This is physical gold, 800 tons. That's 14% higher than the same period last year. Banks are hedging against the easy money policies that they see coming. So the banks believe at some point we're going to see central banks cut rates and print a lot of money. And that's probably going to happen at some point. They are losing control. They're in a corner right now. I think a lot of people are surprised that they've held rates this high for this long, and I think that they should raise rates. They have a choice to make here. Either we're going to go into a very, very serious depression, or we're going to see massive hyperinflation and spiral out of control. And doing so, I don't think America could ever come back from that. We could come back from a serious depression if we began to create jobs and manufacture. Hyperinflation, whole different thing, especially with the BRICS nations now and the competition coming from the US dollar. But the banks believe that we're going to see rate cuts at some point. Maybe it's not this year. Maybe it's the end of this year. Maybe it's the second half of this year. Maybe it's 2025. I don't know. But at some point, I would agree it's going to happen. And when it does, you're going to see gold prices just spiral out of control. and silver's going to go along for the ride too. They're gonna skyrocket. And so you got to ask yourself, whether you hate gold or love gold, or you're a silver bug, you're not a silver bug, why are the central banks buying all of this physical gold? What do they know that the average person doesn't? Maybe they just understand that the central bank at some point is going to be forced to reverse course, print a lot of money, and print all these dollars and lower interest rates, and we're going to just see a flood of cheap money out there, and it's going to cause a massive amount of inflation, and it quite literally will cause hyperinflation, and that's going to be very, very hard to recover from, especially when you have the BRICS out there, who also, these countries are all stockpiling gold. So I think it's going to be who owns the gold at the end of this game. And if you don't have any, if you're a country that doesn't have any, you're going to be a third or fourth world country. That's just the way it's going to be. But they know something, and they're preparing for it. And I think everybody watching this video should be preparing. If you need a good place to buy gold from or silver, go to my link down below, SD Bullion. I've been dealing with them now for 6 years. A phenomenal company. I wouldn't deal with anybody else. Not to say there aren't other good places out there to buy from. And let me be clear, I don't care if you buy, you don't buy. If you're buying from a reputable dealer, fantastic. I think, in my opinion, this is my humble opinion, what I'm doing, I think everybody should own some metals right now. In fact, I think they should own a lot of metals. But I don't give financial advice. I share with you every day what I'm doing, and I buy from SD Bullion. So if you need a good, reputable, safe place that you can trust, go to my link down below. Other than that, have a phenomenal weekend. God bless every one of you. Please like, share, and subscribe, and be walking close to God. This weekend, we're going to go out, hopefully do a little training if it's not raining. My buddy will be coming up from San Diego, who's in the gold and silver business. Ryan, he's been on the show before, so look out for that show. That'll probably air Sunday, Monday. And other than that, have a great weekend. Stay safe. Be careful out there, ladies and gentlemen. There's a lot going on. You never know what you're going to encounter. Always be using and exercising situational awareness. Costs nothing to do that. God bless every one of you. Have a good weekend. Stay safe.